The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Good morning, everybody. Tom and Tommy O'Brien coming to you live from TFNN headquarters, and we're lower to start the day. We're looking at Nasdaq negative by 2 points, trading at 67.65. Dow Jones off 28 points, trading at 23,528, and S&P's negative by 5 points, trading at 25.85. We'll see if those negative numbers can hold. Good morning, Tom.
Morning, Tommy. I thought that was against the law.
I know. What's happening, man? What are they doing? We'll see how long those red numbers hold. It's a short-lived experience when we've seen the market in the red. We'll see if today's any different, right?
There's no doubt, man.
Totally.
Gold has caught a bid. It's interesting too.
Yeah.
It's like we're up $9 and it just like came out of nowhere. We're at $12.84. You got silver up 15 cents, $17.09. We're going to have those oil numbers out this morning. Last night, there was a drawdown of 1.5 million barrels, I believe.
Okay, for the API numbers. And I saw the price kind of declining on that news initially, bouncing back a little bit this morning. And let's see if we can just jump to the chart while I have it in front of me. And we'll zoom it in. Yeah, so I'm looking at the chart right now. Here's the end of the day yesterday, 4:30. We were trading about 57.27, call it, on that news. We spiked down to about 56.84. Pre-market, we're back above 57.10, and then kind of since about 9 o'clock, we've dropped to, 30 cents or so.
Right, right. So we'll see where that shakes out. And what's intriguing is that when the oil went topside, folks, the XLE did also. So, it's going to be interesting to see, is the XLE going to be the next catalyst bringing the Dow into higher price? Because I was looking at some of these XLE stocks this morning, Tommy.
Yes.
And they're trading, folks, where they were trading in 2006. So it's like, I'm looking at the market. We talk about high-priced stocks a lot in the Dow. And I'm saying to myself, okay, what's going to be the next one? I'm still a bear, but when I'm looking at the XLE, I'm saying to myself, you know what? That very well could be a catalyst. ExxonMobil's still looking like a dog, but guess what? If oil really does stay up here, go to 62, 65 bucks, well, guess what? Those stocks are going to catch up with it because the stocks themselves haven't caught up with oil because this move was pretty good. You know what I mean?
Sure.
They've gone up, but not as quick as you get those big.
No, we talked about it going from 40 to 57, right? You're looking at a 40% move in the price of crude, and you definitely haven't seen that type of action in some of those.
And then Tommy and I were talking about gasoline right before we left the office yesterday, folks. And when you look at this gasoline market, holy cow! Look at this. Let me bring this up for a second. You got gasoline unleaded right now, wholesale at 178. That was 129 5 months ago.
Sure.
That's,
Yeah, and that's we were talking about that, and that's the same percentage move on oil, right? For sure.
Right.
But, guess what? People are really going to see it at the pumps when they're paying it weekly, bi-weekly, filling up their tank, and it's 40% higher than it was 2 weeks, 2 months, 4 months ago. Yeah. That's
right. As Andy Heck says, none of us buy barrels of oil, but guess what? We buy gasoline.
We all buy gasoline, pretty much.
We buy the byproducts of that whole deal. So,
for sure.
No doubt there's going to be some action there. Snap got snapped, right?
Yeah, they're continuing to struggle, right? For sure.
But yeah. What's interesting though, Tommy, is that I actually think I like how this is setting up. So picture what you have here, folks, okay? You're coming into a high volume low from August 14th. That thus far is the low. The low of that is $11.28. The high of that low is $13.14. Well, we did 84 million shares that day. We're going to do more than that today. Okay, so the buy's not here, but it's expending a huge amount of energy and it hasn't got close to the $11 price point yet.
Okay.
You know, so if the setup is correct, what I would do, period, okay, is let this go and then see if it can get down to the lows, because those lows right there have like 243 million shares on a weekly, and that's going to be, you know, hard to basically break, you know, no doubt.
Well, speaking of earnings and movements, right, let's go over to our man, Mr. Kevin Hinks, TD Ameritrade, Think or Swim. You can check out Kevin, the whole team at TD Network, live every day following our program, 11 a.m. right here. It's earnings season, breaking down a bunch of great earnings movement. Kevin Hinks, good morning.
What's happening, Kevin?
Maybe we got him. Maybe.
No, I'm here now.
There we go. We got him. He's rocking.
All right.
That's
good morning,
a beautiful
guys.
thing.
How are we doing?
We're doing good, man. We were just talking about some earnings, talking about Snapchat maybe pulling back, disappointing on earnings. Of course, you had Sears coming out this morning as well, pulling back 15%, I think, same-store sales. What's going on over at the TD Ameritrade offices and the TD Network?
Yeah, we were just talking about some of the retailers that are coming out today, Macy's, JW Nordstrom, Kohl's. So we've got a lot of names coming out. You know, earnings season doesn't really stop this time of year. It just keeps rolling. So each day is a new story. And then I think tomorrow's the big day with Disney. And we'll see what's going on with Disney tomorrow. So it seems like every day there's a major story.
You know, Disney is interesting, right? They have a lot going on. When you look at, they have, of course, the entities with ESPN and the cord cutting. And then you have the recent news that they're going after maybe purchasing Fox, right, to kind of beef up their stable of content. And then, of course, you have their movies and Star Wars and doing really well. But in the face of, you know, cord cutting and the money they make off ESPN, there's a lot to kind of digest on a company like Disney.
You know, you've got really a battle of the heavyweights, right? I mean, how is ESPN hemorrhaging affecting things like what you just said, the parks and Star Wars and all the other things? You know, you take ESPN out of this picture, and Disney's a pretty attractive-looking name and what they're doing. However, they have this ESPN problem that is hanging over them, right? The rumor is now some of the numbers coming out, they're losing 15,000 subscribers a day to ESPN. So how do you control that when you've got fixed costs of things they've already paid for? So, yeah, they've got an ESPN problem. But besides that, I mean, Starbucks is going to turn out to be one of the greatest investments in their history, I think.
Yeah, everybody can agree that coffee is one thing that we won't be doing away with for sure. It'll be interesting. I think the one thing I keep looking at is, like, when does Amazon and Netflix come in and start bidding for the content of live sports?
Right. Well, I mean, isn't that what's kind of next? Right,
yes.
Because the difference between live sports and everything else is just that, live, right? I mean, you've got to have people covering it live. You can't just do recordings and then put that out, content, right? The stored content. I think that's what's attractive from 20th Century Fox to Disney is all the content that they own. Now, live sports, that's a whole different animal, but it's hugely profitable.
Well, Kevin, I appreciate it, man. Thank you so much. Right here, folks, 40 minutes. Check out Kevin and the whole team at TD Ameritrade. Kevin, have a great day, man.
Thanks for having me, guys.
Thank you, man.
Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Excuse me, Tom and Tommy O'Brien. So still we're negative. I'm looking, though, it looks like, is that the NASDAQ 100 creeping positive? What am I seeing? NQZ7, right?
That is the NASDAQ 100. It's growling and prowling, and it's just went to Sherwin-Williams and got that green paint, man. It refilled itself. And, you know, at the close yesterday, folks, okay, that's exactly what also happened, is that NDX first went positive, then it lugged the Dow right along with it. So it was an interesting close, needless to say.
Sure.
And, I mean, look at these numbers. I mean, we might as well be up, right? I mean, you know, you get the Dow down 32, the NASDAQ is down 4.
Sure.
If we go inside this Dow...
Or at least might as well be flat, right?
Yeah. Seriously, man. If we go inside the Dow right now and take a look at what's moving it. So let's see. You got... positive out here is Goldman Sachs putting 5 points, Walmart putting 4, Travel's putting 3. Taken away from it, Caterpillar's taking 6 away, IBM 6, JP Morgan 6. So you got it kind of evened out. You know, what did happen yesterday is that the financials, they came off the high with some volume, which is like, okay, so, you know, are these rates going to stay lower? And
can you pull up Goldman Sachs? I'm looking at your chart as well, because Goldman Sachs was struggling, right? And I saw, I think did they get downgraded, or somebody was out there?
They came down hard. They came down yesterday from a 244 to 238.
Yeah.
They did 2.4 million shares. That's after making a high with 2.5 million. That was testing 2.3. You know, and Goldman, what's sticking out like a sore thumb there is that high volume low at 235. It's like, well, we hit 237 today. I mean, that 235 looks like it's going to get, you know, hit.
Yeah.
And, you know, if that baby breaks, then you're back inside this consolidation that it's been in for quite a while. And that's saying, guess what? That's saying that rates are going to stay low, you know? So I know. Let me tell you, folks, I mean, it's pretty amazing. So right now we get the 10-year is 2.3. And if we bring this back 6 months, you're going to see it's almost just about over the center, but not much. The low for the 6 months is 2. The high is 2.461.
Can you bring it back 12 months?
Yep. We take a look at a year. 1 point. Oh, look at that, right? That's pretty cool. It's kind of right on it. 1.85 is the low. 2.6 is the high.
How about 2 years? Is there a 2-year drop down? What is it?
No, I can do a custom. 1 second. Here it is.
Oh, that's
custom.
right. I was just curious.
Yeah, that's 1 second. Let's see. Let's go. No, this way.
That's all right. Yeah.
No, this is pretty cool. I want to see this. Let's put it. Well, I'm going to bring it back to 14.
There you go. January 14.
Yeah, and then. Okay, now. Let's see. So now the question is, how do I say?
Maybe just try hitting enter.
Yeah. Okay.
No.
Oh, good. Yeah.
There you go.
Just brought it up. No, look at that. Oh my God. So, hey, this is pretty cool. So, in the last 3 years, right? That's low.
Yeah.
1.35. But look at the high.
Sure.
I didn't realize that we were almost at 3%.
Yeah, and
2.995.
That might be a full 3 years back, right? For sure.
Yeah. Right. That's pretty cool, though, man.
It is. It is. 1.35. That's quite a number. All right. Today's Wednesday. Let's not get too sidetracked. What do we got going on Wednesdays, right? 10:30?
Oil. Yeah. Cool, man.
Totally.
Pull it up.
Price of oil. I got it going. All right. So we're jumping into the Nadex platform. We're jumping over to crude oil. Let's start things off with the 11 a.m. So we're looking at the December contract.
Okay.
Currently trading at 56.80.
Yep.
And let's see where these line up. So let's see the 11 a.m.s first. Whoops, I'm in the binaries. Okay, backing out a bit. We're going to spreads, commodity spreads, crude oil, 11 a.m.s. So 57.75 is going to be a point that lines up, which is nice. That's only a few points away.
Yep.
Let's see. To the positive side. Oh, excuse me. We're at 56.75. That's the problem.
Yeah.
Okay. Okay, so we would have to choose 57 as our point for the 11 a.m.s.
Okay.
So that would be a little bit of ways. Let's just jump around to the noons first. Oh, you know what's going on is I have this platform up for the last couple hours, so I would just need to refresh to bring up those noons. So just really jumping around. So the dailies line up at $57, and I tell you what, let me just log out and log back in real quick because that will refresh those spreads. So if anybody is ever in the Nadex platform and you don't see those available spreads, you just need to log out, log back in so that you have a refresh basically of what you're looking at. All right, here we go. So I refreshed. We'll go back into commodity spreads, crude oil. Maybe it didn't refresh it. Oh, no, I'm sorry. There it is, 10 to 12. Okay. Okay, and they line up with 56.75. There we go. Okay. So on the bullish side, we're looking these expire at noon.
Okay.
Looks like we're going to be paying about $23.25, call it to the upside. Now, that's going to be the expensive one because we have about 4 pennies of intrinsic value. The floor starts at 56.75. The price of oil right now, 56.79, so you got 4 pennies of value in there. And on the negative side, it's costing us about 21 and 23. So you're looking at about $44 for a noon contract. Pretty much in line with what we usually see there, right?
Yep.
Nothing too staggering. What I do like about making a volatility trade today is just the kind of movement that we've seen in oil in general over the last, 2-3 days.
Right. No, yeah, because you have the low here, like from 2 days ago, is 55.66. Then the high from yesterday is 57.69.
Yes, right?
57.69. Yeah.
Yeah, I mean, if you look at 57.69, our price point is going to be 56.75. So that's almost a full dollar. In either direction, it's more than a full dollar to the negative side and almost a full dollar to the positive side to test those limits.
Right.
And what I like is, I like that it's not the 11 a.m.s. The 11 a.m.s are a little tough because you need that immediate move to be in your direction, like we see with oil occasionally. That first move is not the move that carries the strength for the day, right?
Yeah, there's no doubt.
Yeah.
So this gets interesting. So we're at 56.75. Wow, this is crazy. Okay, I got to figure this out because
we all got to figure it out.
Yeah, I'm bullish on oil right now, but it almost looks to me like it wants to go right back to where this move started from 2 days ago.
I mean, I don't understand the fundamentals as well as most people that are fundamental commodity traders, like, of course, Andy Hecht and so forth.
Yeah.
But just fundamentally, with the amount of production that we have and the amount of renewable resources in the market, I struggle to see oil finding, a consistent strength above $60.
I can see that.
And we're right next to that, in terms of, versus seeing it, trickle back down to 55, 54, 53. That's still a great price for oil in the context of where we've been.
No doubt.
Yeah.
You stay right there, folks. Tommy and I are going to be coming right back with those numbers. Dow Industrials right now down to 25. Nasdaq's off 3. NDX 100 is up 4. S&Ps are off $1.50. Gold's up 860. Come right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, Tom and Tommy O'Brien, we're back. We're back with those crude oil inventory numbers. So you have crude oil inventories rising 2.24 million barrels, gas inventories falling 3.31 million barrels. We'll get the estimates on those, but let's jump in and see where the price is. Looks like First glance, pretty close to where we were, 56.78 currently. Spiked down a little bit to about 56.65 for a split second following that news, and then right back, currently 56.76. So not too much.
That's strong when you got a rise in inventories like this, especially the last night was a drawdown.
It was. It was, and that's maybe we'll we'll get what the estimate was supposed to be, because if that's of course the biggest factor is what the market was expecting and where it came in. But yeah, not too much movement, still hanging around 56.78, kind of literally to the penny of where we were. So, but as we know, that's not always where things end up.
No, that's for sure.
That is for sure, especially with the type of trading action we've been seeing.
Oh, big time.
Yeah.
If we take a look at some of the big dogs out here, so let's go to Amazon and see what's happening. I'm going to leave the oil one up right now.
Okay.
Amazon is, let's see, 11.22. Google, that's flat, by the way, folks. Google has to be flat too, down 81 cents, 1,032. Facebook running out at 179.70, down 56 cents. Microsoft, oh, I know. Hey, I want to go look at NVIDIA. NVDA. I think they came out with their numbers last night.
Yeah.
So
NVIDIA down 1.4%, or $3, trading at 209.
Okay.
If you want to bring up their numbers, though, I'm not sure what.
Yeah. Oh, here. Let's swap right back to oil for a second.
Okay.
See what just happened at the live there, Tommy. Now we got a lot of information. Let's look at this. Okay, so
there we go. So the median estimate was a draw of 2.4 million, and it came in with a surplus of 2.2. Yeah.
Yeah.
Those are some staggering numbers for sure. Gasoline had the draw of 3.3 million barrels, was estimating only a draw of 1.8. Distillates was 3.3 million barrels decline, looking for, let me get that number. I want to scroll down a little bit to get back to those numbers. There we go. Distillates was only looking for a decline of 1 million barrels, so kind of misses all over the place. But the big headline number, is that they were looking for less oil, and there's more oil. That should send the price declining. And let's jump back and see if there's been any movement. And there we go. There's some movement. Oil down 20 cents.
That's nothing. Wow, that's pretty intense, man. Okay.
Well, it's nothing, but it's also maybe everyone taking a few seconds to get a grasp of things and put their orders in. Who knows, But yeah, the price is dropping. 56.56 as we speak, down about 20 cents from that news. And that's only 3 minutes into the trading day following that news.
Right, and we needed 44 cents, folks. We didn't take that trade, but we needed 44 cents.
And that would have been 44 cents below 56.75, and we would have come in about 4 pennies above that to start things off with. So you would have needed, about 45 cents, call it below 46. So 56.30 would have been our break even to the negative side. But that's quite a 5-minute bar we're shaping up to have so far as it continues creeping. 56.54.
Wow, wild, man.
Good. Cheaper gas. We like it.
Oh, man. Yeah, as we start getting close to that $2 wholesale level, that's going to be dangerous.
Yes.
So let's see. U.S. oil exports dropped significantly week on week from 2.1 million barrels to just 800,000 per day. This is helping to increase the U.S. crude inventories last week. Clearly, America needs to keep exports at high levels if the glut is going to clear. Interesting.
Now, that is pretty interesting. I wonder how the dynamics of the fundamental shape of that takes place. How do we go from week on week exporting 2.1 million barrels to 8 million barrels per day? That's 1.3 million barrels per day that just got shaved off.
Yeah. Isn't that wild?
Yeah, for sure.
That's like, where is that oil going? Who's the buyer and who was not the buyer last week? You know?
And I would guess that's a big factor of why we have 2.5 million barrels more than we thought, and instead of 2.5 million barrels less, right?
Yeah, big time. Big time.
Yeah.
Let's go over and we'll take a look at the GDX. The market vectors gold miners trust, folks. GDX out here. We caught a nice bid last Friday. It goes from 22.46 to actually Monday. Today's Wednesday, right? Yeah.
Today is Wednesday.
Okay, so Monday, 22.46 to $23. You had 51 million shares. Now we're pushing into that today, and we're going to want, let's see. Yeah, this is good. We've already done 7.2 million shares. We don't have a lot of price movement, but you get the volume coming into this. This is good. Because what does happen, folks, with the GDX is that at the end of the day, you get about, on a good day, let's picture you get a day that either you're going higher with conviction or lower with conviction. At the end of that day, about 20% of the volume comes in at the close, because what's happening there is that the trustee of the ETF, meaning the fund that's running it,
sure,
that's when they buy or sell and get to the net asset value before the close.
Sure.
So, you know, on the GDX level, we just got inside the 2281 mark, which is the low of October 2nd. What I want to see us get inside the low of September 20th. And then we truly have a chance to get up into those highs of 25.58. So, you know, it's going to be intriguing watching this whole thing shake out, because I'm still not sure what that catalyst was this morning, Tommy, when gold rocketed up. What happened out here, folks, is that...
Yeah, so I'll pull up the chart even as you speak. Go for it.
Yeah. It's pretty wild what we saw happen. Well, it's normal in the gold market, but no, most of the time, you know, I just wasn't in front of... Well, I was in front of the screen, but I was on another network. Gold, you know, basically took off like a little rocket ship and went from this 1280, well, it was, I see, 1281 to 1284.
Yeah, right at 9:15.
Yeah, I guess it's been going up all night, man. Yeah, but that's a good hit. That was a big volume, man. That was 22,000 contracts.
Okay.
At 9:20.
Yeah, and just going back, so yesterday at the market open, right at 9:30, we were trading almost 1281, spiked down to at about 10:20 in the morning, so that was quite a 50-minute period to start yesterday. Right. We were down almost to 1272, and then from there, it pretty much has been a steady incline from that price point all the way up to 1286, an hour ago.
Yeah, and we don't have that much further to go to get this in the next higher trading range, which is going to be pretty wild. So market-wise out here, the NDX is playing with us here. The NDX is almost flat. S&P still down 350, which is nothing. Dow's off 36. You stay right there, folks. Tommy and I are going to be coming right back. Our phone number is 877-927-6648. Dow's down 38, Nasdaq's down 8, S&Ps are off 3.5. Come back, I'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Tom and Tommy O'Brien. So it's earnings season. We had Snapchat last night, and then we had Sears this morning. So Sears coming out shouldn't be too much of a surprise to anybody following the market. Sears same-store sales falling 15.3% in the third quarter. And if we jump over and take
That's pretty intense, huh?
It is intense. So before we even jump over, I'll look, and I know we have a caller on the line. I'm going to get to Rich in a moment. Let's just break down Sears real quick. So Sears had total revenues of roughly $3.7 billion during the third quarter of this year, compared to $5 billion a year ago. 3.7 from 5. Now, recent store closures contributed to over half of the declines. But guess what? Revenue is everything, right? You can fix a cost problem if you're taking in money. That's easier to fix, right? Let's put it that way.
Yes.
But you can't fix a problem of not taking in cash. And when you go from taking in $5 billion in one quarter to a year later taking in only $3.7 billion, that's quite a staggering number. And let's take a look at their chart, how they're reacting today. So there you go. What are they at? 475, down a quarter.
And this chart that I have up right now, if you're looking at this, folks, it's a monthly chart. Yep. It's a monthly chart that goes back to 2003, and it's never traded this low. You know, the high in Sears is $117 in 2007.
Quite a heyday.
Yeah, seriously. This is as far as I can get it going back. But it's a problem.
You know, I mean, we've talked about it fundamentally. We like to tie in personal experiences. People should tie in personal experiences. When you're talking about larger economic shifts, too, you know, we're not talking about short-term day to 2-day to week-long trades. You know, my personal experience when I went into that Sears store at an amazing mall in Tampa was quite a mind-blower. And in a negative way.
And what happened?
I told you. I mean, I thought the store literally smelled from staleness.
Oh, that's right. That's right. Yeah. Right.
It literally, and especially when you're
that's really bad.
It was, and I wasn't. You know, it wasn't something I was making up. Let me tell you. I mean, it really wasn't. I had the feeling that I was in some type of super discount stale store, you know, where sometimes you sacrifice the user, the experience to be in the store to save money, whether it's a dollar store, whatever it is, right? But that's not Sears at an amazing mall, and I forget whether it was International or West Shore, whatever one it was. They're both amazing malls in Tampa, you know, competing with the likes of Macy's, Nordstrom's, Neiman Marcus, and some, you know, you can't have that type of a huge department store in a mall like that and be that separated from your competition. I was just going to say, and the likes of, like, I wasn't even aware that Sears sold clothing, and maybe that's just, you know, I don't want to, but you know, I think Sears whether it's, you know, they have the tools, right?
Appliances, tools, exactly,
right. You know, are they really in the retail business of clothing? It doesn't look like they're going to be there for long if they are.
No, and you know what I have up here, folks, is that Sears Holdings is going to pump $407 million into its pension plans as the department store cuts costs and tries to get its house in order. Well, it's been trying to get its house in order for a long time. But watch this. When you go down, and this is where you're going to see that the stores, why they're not clean. So adjusted earnings, here it is right here. Adjusted earnings before taxes, depreciation, are going to be a loss, well, about 100. No, also they're improved by 100 million. But watch this: Sears reached its annualized target of savings of 1.25 billion. They're claiming by streamlining operations and closing underperforming stores. But you can see right there, when you're talking about that type of savings in 1 year, what they're really doing is not taking care of their properties.
Well, and I mean, they saved $1.25 billion. Well, guess what? They had a decline in revenue of $1.3 billion over that year. They went from $5 billion to $3.7.
There you go.
So, you know, what's the point in saving $1.3 billion if you lose $1.3 billion in revenue in that same exact year? Aren't you kind of back to square one? Okay, enough Sears. Let's go over. We have Rich from Portland, Oregon. Rich, good morning.
Hey, Rich, how you doing?
Good.
Good, man.
What are we taking a look at this morning, Rich?
How about yourself?
We're doing great, man. We got a lot of market action.
Tell me what the temperature is there.
Oh, it's gorgeous. It's 75 degrees out. It's
we're in a beautiful part of the year, and we're getting some good weather.
Yeah, you got heaven, and we're starting to really get cold here.
What's the weather like in Portland this morning? And it's early out in Portland right now. Can you hear me, Rich? Oh. No, maybe not. Tom, can you try talking to him? We're having a little bit of technical difficulties.
Yes. Hey, Rich, can you hear me?
Yes, I can, Tom. I can't hear Tommy.
Okay. Yeah. So, what is the weather out there like right now? You know, I know you said it was cold, right?
Yeah, we got east wind that blows down our Columbia Gorge, and it makes the temperature about 38.
38. Okay. It's not the end of the world.
No, but
so
what are we? Tom.
I know, man. What are we going to look at?
I wanted to see what your Nadex options charts were showing on Square. SQ.
SQ. Okay, so 1 second. That's
So what does happen, I know maybe you can help him if he can't hear me, Nadex doesn't have individual equity options, just to...
Yeah. But I get Square up here. So Square is mobile payments. The low for the year is 11. The high is 37. Oh, look at this. Has been a one-way trip up.
Yeah.
Interesting.
Mobile payments is a good sector to be in. Can you hear me now, Rich?
I can hear you.
Perfect. We got to figure it out. Look at that chart. Man, oh, man.
That chart. $8.42 in July of 2016, now with 36. So what are you thinking doing with this, Rich?
Well, today's earnings announcement.
Okay.
I'm wondering, can this thing pop? Because it beats by a penny or two.
Okay, so let's see. It's an ABC up from way back. So A point on this would be, I'm going to ballpark it at 14. Yeah, so your B point, ooh, that's a big one. It's 28, 27, 24, 34, 30. Oh, interesting.
We're there, right?
Yeah, we're there. Yeah. So what this just did is it finished an ABC structure up. The ballpark would be 38, and we hit 37.75. It doesn't mean that it can't pop again. Most of the time, though, when you finish an ABC up, it does something other than continue that way, before taking a break.
Just to give you as well, Rich, I have some friends that are into the credit card processing business, and they can't stand Square. Because they're a regular credit card processor, and Square is great for small businesses. You can grab that little portal, plug it into your phone, accept credit cards. but they charge a much higher fee than most companies charge if you have a regular credit card transaction, account. Like we have a TFNN, we charge credit cards, you're paying a certain percentage on those fees, you're paying a transaction fee. Square has much higher charges, and so it's very user-friendly. But my friends in the business, they can't stand the PR battle that Square is winning by getting these customers. Meanwhile, they're charging them higher, and there's some competition that Square might face, especially after seeing that type of a run, just to keep in mind.
Well, I had experience with them showing up at my house, a furnace repairman, and it was a quick...
Hang on, we want to hear that story, all right? Yeah. Hang on for the break if you can. We'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors. Learn how to trade options with swim lessons. Brought to you by TD Ameritrade Thinkorswim. Next on TFNN.
Welcome back, folks. Tom and Tommy O'Brien. Market's still negative, but creeping to the positive side. Maybe we'll see. S&P's only by a few points by the end of the show. So go ahead, Rich, when you were talking about your experience with Square.
Well, the reason I started looking at Square was we had to have a furnace repairman show up at our house that we're living in now, and I just found out he could take credit card on the spot. Didn't have to go back to the shop or anything.
Right.
He swiped it. The transaction was done in seconds, and off he drove. And, again, they're just a small furnace repair place here in the metro area of Portland, Oregon. I came into contact again where I was doing a rehab on a house, and we had to have the door frame redone. And, again, this fellow was able to, this technician, who is an absolute craftsman, he was able to run my credit card through.
Yeah.
My hairstylist uses it similar, right? Small business, one entity type deal. Go ahead, Tom. What were you going to say?
Well, what's cool, and it's what you're saying, Tommy. So picture this, folks. It's very hard to get really good rates with the credit card companies. But what Tommy's saying, and I absolutely agree 8,000%, is that once they establish it with Square, what will end up happening is that the larger processors will then say, okay, you've shown me a track record, okay, and then they'll either gonna have to bring down their price, or those small processors can go to a larger processor and they'll bring down their price, because we get calls every 6 months for our account because it's public information and they want the account.
And what happens is that the Square fees are high, so there's a lot of room for competition to maybe come in and undercut them. Just I'm aware of it, and the fees are high compared to industry standards, and there's greater competition with that type of even a processor like small business card reader. Thanks for the call, Rich.
It is great for everyone.
It is. No, and it's just a price war, so just be careful as they face some competition. Stay tuned, folks. Have a great afternoon. Great day of programming at TFNN.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.